My wife is hangry. Well,
So
our
there's an
reservation-
interesting question here about the bullion banks selling short silver. And it's important to understand how the COMEX market works. The COMEX market, when the bullion banks are shorting silver in this market, I could argue that it is actually bullish. Now, I know that sounds kind of crazy, but when you talk about the longs in silver, they're not the ones who control the delivery. It's the shorts. If you're short in silver, the only way to deliver is to issue a short contract for delivery. And so, in other words, think of it like a coat check room, where the long has the ticket to get his coat back, but the short holds the coat. And in order for the short to deliver, they have to actually hand over the coat. And so, in essence, what we are seeing, in my opinion anyway, is if that were to happen, it's actually bullish right now. It becomes a real big problem if the shorts cannot deliver or refuse to deliver. In other words, no silver leaves the COMEX unless the shorts make it happen. And so the bigger issue would be if the shorts not being able to or not willing to hand over the real metal. So if you're long, you have to first, in order, it sounds counterintuitive, you first have to go short on the COMEX in order to stand for delivery. If that doesn't happen, if there were shorts that wouldn't deliver, in other words, if they were called to deliver, the whole paper market breaks. And when that happens, silver just doesn't go up. It gaps way, way higher. And that's why delivery stress is always very bullish for physical silver. This delivery stress right now that we're seeing is very, very bullish for silver. And if the shorts can't deliver, the paper game ends, period. And then silver explodes higher. No delivery, no trust. That's when silver goes vertical. So the shorts by the bullion banks is actually what we would expect to see if we want silver coming off the COMEX.
Most people still to this point in time have 0.5%. Oh, here's the statistic that I wanted to mention, which I thought was quite significant. Hold on, that was that. Give me 1 second. This was pretty nuts. That's not the right one. No, that's the wrong one. But this is a pretty insane statistic. And again, I compliment Ball Guy Money for this one.
Ball Guy's a good guy.
Hold on, where is it?
He's bald, too, by the
he
way.
is bald. All right, so here we go. Ready? There are 8.1 billion people in the world right now. If we take the amount of silver and the amount of gold per individual, there is only 3.1 troy ounces per person and 1.2 troy ounces per person of gold. Look at that. 3.1 troy ounces of silver per person, 1.2 troy ounces of gold per person. That's pretty astonishing.
It's not a lot.
No, and if we take the amount that you actually own, I would think that you can probably take what? Ecuador, Portugal, Vietnam.
It's been a long time, dude. It's been 36 years of accumulating.
And not only that, but I mean, the how many times do you tell me on a daily, dude, I remember 300.
I remember
500.
I remember
1,000.
buying. I remember buying tubes of gold Eagles for $6,000.
I want that.
Now they're 85,000.
I want that.
I know.
I want that. I want that. And I will tell you this. Mario wants to know, is now a good time to swap silver for gold?
No, Mario.
Definitely not. Somebody called me today and asked me the same question. Look, if any dealer or broker tells you it's a great time to swap silver for gold,
they're lying.
They are only in it for the money. Because right now, I truly, truly believe that we are in the early stages, the early innings of the game. Tear off a piece. It's like the onion. You peel a little bit of the onion off a little bit of a time. But right now, we're just taking the onion out of the fridge. That's all we're doing.
We're not supposed to keep onions in the fridge.
I do.
$100 silver. Analysts say the metal could double from record highs.
And that's CNBC.
Yeah, just 2 days ago on the 13th of October. I mean, what happens if Rickards is right and we're seeing $20-some thousand gold and $1,000, $2,000 silver?
Yeah, I think these are all very possible, because what that would do would be to massively devalue the dollar in order for the United States to once again be the hub of manufacturing.
Because of backwardation and silver price rising to crash the dollar's value, silver futures could be profitable.
Yeah, I would think
Risky but profitable.
Yeah, I mean, I think you'd be better off buying the real thing.
When I stop and think about this, people worried about, oh my God, what happens if they do devalue the dollar? How do we protect ourselves? If you get your money sitting in, or your savings sitting in metals, it automatically self-corrects if they devalue the dollar or revalue the metals. Even just having it on a Glint card instead of having it sitting in your regular debit account or bank account protects you from them changing the value.
Baking soda. Andy, what about mining stocks? I think mining stocks, this is their time. You should own some.
Redeem. Trump puts the U.S. in for 10% of Trilogy Metals. Thoughts? When they say Trilogy Metals, they mean gold, silver, and what else?
Yeah, any of the critical minerals that they will be able to mine. Yeah, and I think that goes to show, again, they're putting a floor under these things, you guys. They're putting a floor under silver. And gold is going to be attached to the monetary system. Don't buy it to get wealthy. Buy. Look, I've been right, man, and I'm not the kind. Kevin will tell you I'm humble. I'm not braggadocious, but I've been right on your show. I've been right all along. I'm telling you, they're not going to let gold and silver go down.
And one of the things, and Mark, I don't know if Andy had mentioned this last time, but the chief investment officer of Morgan Stanley came out publicly about 2 weeks ago and basically changed the asset allocation as a whole for Morgan Stanley. It was 60% equities, 40% bonds, and changed it to 60% equities, 20% bonds, 20% gold. So,
well, there's more than that. Bank of America just said, the CIO, Michael Hartnett, 25, 25, 25, 25, 25 gold, 25 bonds, 25 short-term treasuries, 25 stock. The head of Jefferies, it used to be a primary U.S. mint distributor. When Miles Franklin got appointed as one of 27 U.S. authorized resellers, it was by Prudential Beige about 20 years ago. God bless them. And Walter Paholich, the guy that used to run their desk. Love you, Walter. I know you're not listening, but I love you. And when Jefferies bought Beige, became Jefferies Beige, they were one of the world's largest primary mint distributors. They got out of the business, but they know gold. They just called for $6,600 gold as their next target. Maybe the biggest one of them all is Jeffrey Gundlach, the bond king. Jeffrey Gundlach is a guy that made his mark and his life on selling bonds, the antithesis of gold. He says a 25% allocation to gold is underweight. You got, and these people, Gundlach, Hartnett, the CIO of Morgan Stanley, Jefferies, and let's not forget Goldman Sachs, who said if the Fed loses independence or the perception of it, you'll see gold at 5,000 overnight. Well, with Bo Hines and now Stephen Mirren, who were both advisors to Trump, one in crypto and one just an economic advisor, now one running USA Tether, the other being in the vacated Fed spot, there is no independence. You're getting, these people are talking to their institutional sized traders. Michael Hartnett's newsletter is thousands and thousands and thousands of dollars a year. They're not talking to the plebes. They're talking to the big traders, institutional. And they're all saying, what did you just tell me last night about someone changed their, we were in the car and you said someone just changed their outlook. Was it Goldman? 5,065 or something?
Yeah, no, it was Goldman Sachs actually just put a new target out for next year. I think it was 5,800 for gold and 65 for silver. Oh, it's mine. And 65 for silver. One of the things that I just want to say, though, is with Morgan Stanley going from the 60-20-20 or 60-40 to 60-20-20, in essence, what they're saying is sell half of your bonds. If you were 60-40, that 40% now going 60-20-20. So anyone that's out there will be selling half of their bonds and should be taking those assets and proceeds and purchasing gold. So if you think about how much money is in that fixed income of that 20% in bonds, would gold be going down on that? No. And I personally think that the numbers could have been a little bit more skewed. But if you get a bank like Morgan Stanley, Goldman Sachs, UBS, any of the majors, and they came out and said 40% equities, 20% bonds, 40% gold, what is that going to do? It's going to scare the shit out of the American people, because basically then you know where we're really headed.
Real quick, don't mean to interrupt you. Look what it just popped up. Don't mean to interrupt. I'll let him finish his thought. This just popped up. JP Morgan gold, Jamie Dimon gold can easily go to $5,000 or $10,000.
There you go. Head of JP Morgan.